Good morning, traders. It's the 15th of December. We are Signal Centre talking ball. I'm a very cold Joe and joined by Steve this morning. How you doing, Steve?
Yeah, I'm not so cold, but it's still a little bit chilly out there, Joe.
Yeah, my little office outside in the garden, -5 at the minute. So got the heaters
Ouch.
on, got everything going, trying to keep my hands warm. Type on a keyboard, it's not ideal. Anyway, shouldn't complain too much. Right, let's get stuck into it then. So plenty going on yesterday and plenty more going on again today. So let's just run through the headlines. Yesterday, we saw the Fed hike rates by 50 basis points, which was as expected, taking the overall rate to 4.5%, and the vote was unanimous. The statement reiterated that the Fed was highly attentive to inflation risks, while indicators pointed to modest spending and production growth. The rate projections edged higher. The latest forecast of interest rates from individual committee members stated that they expected the funds to increase to 5.1%. So the overall rate to go 5.1%. Which is ahead of the 4.6% estimate that we had previously. So we're expecting maybe rates to peak around 5.1 to 4.9%. So it was then all important about what Powell said in his statement, and he reiterated that he anticipates that further rate increases will be necessary, and that the labour market remains out of balance and very constrained despite some declines in vacancies with an underlying labour shortage. We saw treasuries regain initial losses. They dipped immediately in response to the policy statement, but regained ground with the 10-year yield unable to hold above the 3.5% level. We've also seen some weak Chinese data. The latest Chinese data was weaker than expected, with an increase in industrial production held to 2.2% in the year to November from 5% previously, and below expectations of 3.4%. So that was well below. The dollar's been unable to hold on to any gains. We saw an initial move higher, but failed to hold on to those gains. Very choppy trading yesterday following the press conference. We've had some employment data from Australia overnight. The latest data recorded an Australian employment increase to 64,000 compared with expectations of 19,000. So that was very good indeed. And then we move all eyes to today, where we've got the ECB, the Bank of England, and the Swiss National Bank, all expected to hike rates by 50 basis points. So between kind of 12 o'clock and 1:30, in fact, we've got the Swiss National Bank due out at 8:30, and then we've got a number of others due out later in the day, which we'll come on to in a moment. Before we do, let's get into some charts and have a look how yesterday's choppy price action affected some of the major assets that we look at. So Steve, you can kick us off with cryptocurrencies.
Yeah, sure. Let's dive into it. And all sort of gear was in reverse yesterday. Price action after a decent rally up to above the resistance level. Here we look at the daily chart in Bitcoin. We posted above or broke through the resistance level that we had at 18,150. Even if we go back, there was a spike low on the 13th of October. There was a few reasons for that level. The swing high after the sell-off from the 10th of November being the main one. And we formed almost a shooting star, not far away from it. And potentially, if we get a sell-off today, this will be an evening star formation, which at a decent resistance level is a pretty key reversal formation. So all eyes on really if whether Bitcoin can claw its way back above the highest it's been today is 17,850, and it opened today at 17,806. So if we can close above there, then it's sort of like it stalls this ominous looking reversal formation for the bulls. Obviously, you know my view on it. Overall, I still think we're moving lower. The weekly chart is really struggling to get above this previous solid resistance we had between 20,000 and 17,700. So tried to break back into there, as you see, but is failing so far. So negative on cryptocurrencies for the week. Let's take a look at gold. Gold's had a decent reversal, which normally I'm sort of like quite happy about, because the overriding formation is this double top formation on the weekly chart. We have had a double bottom, a shorter term one, which had a measured move target up at 1844. I'll show you on the daily chart. So we've got obviously the 200-day moving average that's trading at well, around about where we're trading now. It's actually, we're back below the 200-day moving average. We've been above it for the last well, two of the last previous 3 days, and we closed above the resistance level of 1810 as well, spiked up to 1824. The measured move target was 1844, and a 50% fib was hanging about there as well. So that was going to be a tough one to break through, but it seems to have stalled $20 in front of there, and we've reversed very sharply indeed. And the dollar index hasn't really gained much ground, so this is more of a technical gold reversal rather than based just around the dollar. And I think there's maybe some concerns that the dollar might improve or might move higher, which has led to a trip lower for us. We've got the 55 and the 100-day moving average threatening to cross in the next week or so. Yeah, we've got support coming in at 1778, and it looks like we could challenge that. And this green band is a pivotal area for me for gold. So when we're above it, I'm mildly bullish. When we're below it, I'm mildly bearish, and I'm more bearish below 1730, more bullish above 1810. That's my current take on the market for a medium-term basis. Overall, as I say, we're still in the middle of this double top formation, which has a measured move. Well, let's remind ourselves where the measured move is. All the way down. Did that show us it? No, it didn't. Oh, it did. Yeah, it showed us in the green line. I've highlighted in green now, so it's a little bit of a target. 1287, that's the overall target formation. But let's not forget how good gold can be sometimes, especially in times of crisis. Inverse head and shoulders on silver has been a bit more productive, although it's again has stalled in front of the measured move target, which was 24.92. We stalled at 24.13 and reversed sharply yesterday. Again, you've got a hanging man candle from yesterday, and reversed overnight, and potentially forming another evening formation, evening hanging man formation. I don't think it exists, but I'm going to call it that anyway. And also, we're well above the 200-day moving average, the 55 and the 100. And they're all threatening to cross as well. So silver still looks quite positive at the moment, but probably a little way to go before we can confirm that positivity. Copper reversed overnight as well. The 200-day moving average helping cap gains. That's coming in at 388. The 396 previous resistance swing high at 14th of November. That's another hurdle to overcome for the bulls. At the moment, we're looking more focused maybe on the supportive band between 373 and 378. And yeah, we're sort of like motoring down towards that 378 level at the moment. So we'll see how that fares as the day goes on. Take a look at crude oil. 3 really positive candles we've seen in crude oil, and we've stalled just in front of the $78 mark. We're on the back foot this morning, 76.62 trading. Let's take a look at the 4-hour chart. There's a little bit of Ichimoku cloud to overcome here, but again, evening doji star formation forming on a 4-hour chart, so that's negative, and this is threatening to move lower after the short-term impulsive move higher. So a nice little correction in that was copper, that was crude oil, sorry, in crude oil. On the Brent crude oil, similar sort of formation, a little bit, doesn't look like the price has come through for yesterday's candle very well either. In fact, oh no, it is. That was the 9 o'clock to 1 o'clock candle was very quiet, obviously. Overnight, I was looking at the daily chart. Overnight, we've seen a breakdown back into the Ichimoku cloud. So expect volatility to remain elevated. This is also after the decent move up yesterday from oil inventories. Natural gas has, let's take a look at we were looking at gaps on natural gas. Yes, it's filled that gap on the daily chart in natural gas. We remember the week before we closed on the Friday at around 621, gapped open, stayed there all the way till the following Friday, and gapped up, filled the gap. This week we filled the gap already because we broke up higher and we're back down on the defensive mode. The overall overriding formation I've got here is a head and shoulders formation, but that neckline is proving a really decent support area at the moment of 533. That about covers me. Joe, do you want to dive us into dollar?
Yep, let's have a look at that and see in the wake of the number yesterday what happened. Let's just get the dollar index chart up. Here we go. So all my charts there. Let's go to the daily. So still got this head and shoulders top pattern. That's kind of the overriding pattern that we've got playing out here. So therefore the bias is for lower levels. We had support in at 104.11, which is highlighted here by this blue line. We saw the breakdown below that on Tuesday, and yesterday we posted further decline. So we were off the worst levels of the session, but confirmed that this resistance, this is now a level of resistance. We're trying to rally higher today, up by 0.4% as things stand. We may get an overshoot, maybe as high as around 104.67, but for me, the bias is still on the downside here. So still looking for lower levels. And no real change in the big picture view on that, but certainly room for a bit of a corrective move higher in the very short term. Let's take a look at Euro US dollar. This is struggling to try and overcome resistance, although yesterday we did get a close above the 106.52 level that we'd highlighted. This blue line here, or 106.40. We closed above it. We are pulling back now to retest that level. It has been a very sharp move to the upside, so any kind of pullback, is likely to only be a corrective one, but is likely just to really, see if we can get some acceptance of price up at these levels, form a new base, and maybe continue higher. So overall, still bullish, but believe there is room for a correction, maybe down to around 105.90-ish in the very short term. If we look at cable, we can see that was overcome the 50% Fibonacci retracement level on Tuesday. We pushed into a fresh resistance level at 124.30, and that level has proven to be a barrier too far at the moment. Obviously, a lot of white space for this to move into on the upside, but it's been such a strong move that you would like to see ideally some sort of pullback to find some support and then maybe continue moving higher. So a little bit concerned about chasing these markets at the moment. The same with the dollar on the downside. Ideally, I'd like to be selling into rallies with the dollar, and on these markets, maybe looking to buy into dips. Let's take a look at dollar yen. We can see here that this is still trading within the bearish channel. So that for me, this is still the best market to trade on the dollar. Given that we've got a very clear bias moving lower within this channel. Yesterday we posted a bearish outside, sorry, no, that was the day before on Tuesday. Yesterday, very undecided, we posted a doji candle. Let's just get rid of that. We can see there, pushing higher today. Again, looking to sell any rallies into kind of the 137.70 level, expecting prices to remain within this channel and then ultimately head lower towards 131.40. Let's take a look at New Zealand dollar, US dollar, see what that's doing. So that rallied into a resistance level. We've got 50% fib level, and we've got these previous swing highs from back in August. We are still within this channel, the bullish channel, but we have found some resistance here. So maybe some sort of pullback towards the lower end of the channel is likely now, given that we've seen, again, such a strong move higher. So I wouldn't be surprised if we see some of these markets unwind in the very short term. Let's take a look at Aussie versus the US dollar. Broken out of the downtrend, completed an inverse head and shoulders, hit the measured move target, at which prices have now been rejected, posting a nasty looking red candle as things stand at the moment, down by 0.8%. So we had that strong employment number out from Australia overnight, and the markets are reacting negatively to that so far today. So again, pullbacks really towards sort of 67.40 would be ideal for us to continue getting long of this. Overall, the trend remains positive and looking for higher prices. I'm going to take a look at Aussie Swiss because someone's asked. And obviously, if anybody else has got any requests, please feel free to fire them over, and we'll do our best to cover them. But this is the daily chart on Aussie Swiss. So as we can see here, prices rallied throughout this period, run into some resistance here before forming what looks to be a top. Then we got this consolidation, which appeared to be a continuation pattern, and prices moved lower. But if we look at the sort of current price action, we can see that it's very range bound, trading between 62.87 to 64.47. So while prices remain within this channel, we can expect them to remain mixed and choppy. But if we do get a breakdown below the lower end of this range at 62.87, then we can start expecting certainly at least to move back down to these lows that we saw in October, and probably lower, given that this is likely to be a continuation pattern. So at the moment, not sure what I'd want to do with that. I think I'd probably prefer to see a break and then a retest in order to get short. Obviously, don't forget we've got the Swiss National Bank announcement due out in 13 minutes. So they are expected to raise rates by 50 basis points. If we take a look at the intraday setup here, we can see a head and shoulders that formed over here on the left. We've got the left shoulder, the head, and the right shoulder, neckline somewhere around there. Then we kind of consolidated below it for a period. Then arguably, you could say we've completed a double top pattern here. So there is a lot of technical indicators or technical patterns that we're getting played out within this at the moment that indicate lower prices. But I'm just a bit concerned ahead of this major announcement. Ideally, I'd like to see a break of this level, then maybe a retest, something like a breakdown here, then a retest, then I'll be looking to sell in there somewhere for an extension lower. So I'm going to leave it there, I think, for the currencies, unless there's any other requests.
No, I haven't seen any. I'll double check on TradingView whether they've got any as well. Hold on one second.
No.
No.
Indices. You're going to look at indices?
Actually, there is some thoughts on New Zealand dollar yen. We've done that, and CAD yen.
No, we haven't. But let's do it, shall we? Let's go back to the FX charts.
Yeah.
So CAD yen and New Zealand dollar yen.
Yeah.
Okay. Let's go to CAD yen to start.
Just talking about that bearish flag has been invalidated yesterday, maybe.
Yeah, so we looked at this yesterday. Looked really nice. Big top pattern setting up here, potentially a double top up here, broken down. Then we got a flag pattern, and yeah, we closed yesterday with a bullish hammer candle. So not quite inside, according to my drawing. I mean, it's quite subjective. It depends where you draw it, but arguably you could say it traded back within the flag pattern and pushing higher today. So yes, not the kind of clear price action that we want to see on these patterns. I actually had some positions on that myself yesterday, and yeah, it hasn't really worked out. So going to probably get out of that and await for a fresh signal. New Zealand dollar, Japanese yen looks quite interesting for me. Potentially a swing failure here. So we tried to overcome the highs that we posted in September. We had a little bit of a look above and then closed back below it to indicate that we got that swing failure. Yesterday, we then saw a continuation lower, but then we reversed that following the Fed discussions and statements and rates that came out yesterday. Again, a bit on the back foot today. So I think my bias would be for lower levels on this, given that we had that swing failure there. If we look at it on an intraday basis, then arguably we could say that there was a bit of a top pattern forming here. We've seen a rally higher, and this candle here that we posted between 7 and 8 a.m. was particularly bearish, but we are reversing that higher at the moment. So I may come back to that. I think that could be a good option for a day trade today for my gun to the head. So
I might jump in front of you on that, but
no,
we'll see.
Sorry, it's mine. So yeah, hopefully that was helpful.
Excellent, thanks, Joe. Yeah, let's take a look at indices now, and we'll start with the Dow. We saw the spike higher from the CPI number. Yesterday was a very indecisive day, dodgy candle, as Taff would say, around this like major resistance level, which was the swing high from the 16th of August. So yeah, looks like we have sort of like failed to break higher. All eyes will be on the next support level at 33,425, just about here, which was the sort of like low of a 5 candle streak. So that's pretty decent. A break below there should target maybe and move down towards this reverse trend line, basically the downward trending resistance line, which should act as support now. Also, we do have the crossovers of the 55 and 100-day moving average to consider, and also potential for a crossover from the 100 to the 200-day, or the 55 to the 200-day, then the 100 to the 200-day. So still not giving up complete despair, or there's not despair on the Dow at the moment. It's still sitting quite firmly in the mildly bullish camp. Nasdaq, however, is the one I'm short of at the moment, and for me, it has really reacted technically very, very well at the sort of like the charts, the lines we've got on the chart. We've got this downward trending resistance, which was formed of 1, 2, 3 points. We've added a 4th point with that spike higher after the CPI number. Let's drill down into it. And we were in a inverse head and shoulders formation, which had a measured move target all the way up to 12,940. So it hasn't completely given up on that yet. But the price action from that spike higher has been pretty negative. That's a shooting star-like candle. Obviously, shooting star would be better if it was the highest candle and the body was above the previous candles and everything. But it's still the same price action, negative. We've also down below the 100-day moving average, and the 55-day support comes in at 11,400 to 438, around that level. And we've also, as I say, got the 55-day moving average down there. So that's probably a short-term target for the bears. A break below there should open up the downside, and really bulls have got to maintain levels above here for another go at this downward trending resistance line. So again, a little bit 50-50 on that Nasdaq, but that's the one I'm short of myself. The S&P 500 broke higher through the downward trending resistance. There's 1, 2, 3. There was already 3 clear points there, 4th, and we've spiked higher, but it hasn't really invalidated. It didn't close above it, and even yesterday we sort of touched it with a doji candle. To the overnight price action is negative, and we've got support coming in at 3,905. That is the key level in the S&P for me. We've also got the 100-day moving average sitting in front of there, and the 55 ready to catch anything that goes below it at 3,856. China overnight is a little bit negative. Yesterday was quite positive. We're still below the 200-day moving average. Inverse head and shoulders, still a long way to go to threaten the measured move target. Support coming in at 13,000. Resistance really probably above the 200-day moving average. Break above there, 13,335. Hang Seng reversed sharply, and we've touched the low that we saw on Monday, and backed away from that a little bit. But the 200-day moving average has capped the price action, and on the back foot there. The inverse head and shoulders has a measured move target of 22,172. Really, we need to get above the 20,000 level before we can even consider that. And the Nikkei has been quite indecisive the last couple of days, and again had a rally up, but failed to form a higher high, and looking bearish as we continue into this hour. Let's take a look at the FTSE. FTSE yesterday, or the previous day, it's sort of like we had that rally after the CPI number. Yesterday was pretty indecisive, and today we're already on the back foot with 7,422 acting as support at the moment. We've sniffed at it. We've just got down to 7,424, but we're hanging around there now. Now, that is a classic. You'd wait for the break there before getting short. We've got all the major moving averages below, ready to catch it. It looks like this nice impulsive move is in the middle of a correction. So if we seen the first 2 legs of the correction, waiting for the third, maybe down to this area, potentially. And the DAX, again, that's sort of like pushed above the previous, the double top formation that we're looking at. So that's, for me, is now we look at it retrospectively, is still valid. Neckline is a lot lower now, 14,200, and we're trading around a previous neckline of the initial double top, which is 14,317. So everything feels a little bit defensive at the moment, but I don't want to get carried away with it because I'm on a poor run on the gun to head, so I'm not going to get too cocky with anything.
We both are, mate. Don't worry about it. I think it's every time we talk about going live with it, you know, real money,
Yeah.
we start losing. But yeah,
Yeah.
so the gun to the head challenge. This is where Steve and I pick trade ideas live on the video, as if we had a gun to our head. What would we trade right now? Each of the ideas that we come up with have stops and targets. They're all placed at market, and they will expire at 9 p.m. or when the stops or the targets are hit. Been no worries about us waiting for the 9 o'clock close of late, just because we keep getting stopped out on these trade ideas that we're posting. It has been obviously very choppy in the last few sessions, and just goes to show when you're in those kind of volatile periods, it's very difficult to trade. And you have to be very nimble indeed. So let's take a look at yesterday's ideas. Just to recap, Steve was buying gold. He was looking for higher prices, but obviously, you know, we had the Fed information out yesterday, and as a result, Steve was stopped at around 7 o'clock. So pretty much on the speech. So up until the speech, he didn't really do anything. Then obviously we got a pretty big bout of volatility. I was looking for a double top to play out on dollar yen. It was looking good for most of the day, and then that candle happened there, which got me stopped out by a couple of ticks before then it moved back lower. But it's back at those levels again now. So yeah, what can you do, Steve? Stopped out. Let's move on.
Yeah, it's
Let's try
annoying,
and
isn't it?
have
Let's
another
go
go.
again. Yeah.
Yeah. So just a quick update on the old P&L front. So just can zoom in here and see how we've been doing. So we did have a very good run of late, but we've just pulled back now to hopefully support on our chart of our P&L. And maybe now's a good time to buy.
Yeah, like it, Joe. Here we go. That fills me with
Uh,
confidence looking at that technically.
yeah. So before Steve jumps in and tries to nick my idea that I've already gone through, I'm going to
Oh, I
go
can't
and
believe we've
get
already
this
done it.
up now on New Zealand dollar versus Japanese yen. So one of the viewers mentioned this as well. Seems to be a pretty good spot to have a look at this. We've obviously seen prices quite range bound of late. We tried to make a new high on Tuesday, but failed. So we made a push above, but then closed below that level, and looks as though prices have the potential to move lower. If we look at this on an intraday basis, on the hourly chart, we can see a nice bullish channel here that had formed. We saw a breakdown. Then we saw prices push lower. We've seen a retrace 50% of that down move. So for me, that's a pretty good area to think about getting short. So I'm going to sell it at the current price of 87.26. Going to have a stop loss above these highs over here at 87.68. Targeting a move down to 86.37, which is into sort of cluster of previous support and resistance levels, giving me a 2.15R return on that one today. So I'll get that published up in a moment. Over to you,
Excellent.
Steve.
Right, I'm going to go with selling Nasdaq. I'm already short of Nasdaq. I've been short since I got stopped out. That I think we all talked about this in the week. I was stopped out on this this spike higher. Stopped out on my DAX as well, so that wasn't good. But it got up to around about these levels, and the 200-day, the downward trending resistance line, and it stalled there. So I managed to sell it again there. So I'm on side. So feeling quite happy about that at the moment. But it's very typical of me. I'm sort of like just treating it as though that's the top of the world, and the world is going to collapse. So probably will get stopped out at some point. But yeah, really thinking about this targeting a move to 11,438, and I think we've got a nice setup to do that. We're back below the 100-day moving average, and yeah, so all. Oh, I'm missing out on a bit of getting in now, Joe. Talking too much. So that's what I'm going to do. I'm going to sell that now. Key thing is, oh, let's get it right. I'll take as much as I can out of this. Yeah, what was that level I was looking at? I moved back down to 11,438. So if my target is 11,438, I need to have a lot tighter stop than what I really want at the moment. So that's not good. So let's take a look. 11,620 we're getting short at. I'll give myself, let's get a bit more than that. 120 point stop. That's not a bad one. And I've got to go for at least a 2-to-1 risk reward. So yeah, targeting a move back down to 11,380. There you go. I'm not going to get too greedy with it. I'll just take 2-to-1 out of you. I mean, obviously the stop is at a pretty crap level, but just maybe I should sort of like adjust that and make the target a bit further. Why don't I do that? Take the stop above there. Take it down to here. That's a bit better. Getting short here, 11,620. Stop at or a target of 11,208, and the stop at 11,789. That's a risk reward of 2.44. There we go. I'm happier with that.
Okay, cool. Just a quick bit of news before we move on. We've just had the Swiss National Bank come out, and they've actually moved interest rates by 1%.
Oh,
is that right?
Dirty dogs. I don't know. Have they really?
It says the actual was 1%, or the forecast was 1%. No, so they've raised it by 0.5% as expected.
Oh, I just traded on the back of that, Joe. It's like,
sorry, mate.
Can I
Fake
make
news.
a claim?
Yeah, probably. This is Euro Swiss. Big reaction on the number. So we saw a big move lower initially and then reversing that higher. So this is the hourly chart. So yeah, quite a bit of volatility as a result of that number that's just been published. So yeah, do be careful. We are expecting more of this later today when the other central banks start coming out. So just to go through what's out today. 12 o'clock, England, Bank of England policy decision. 1:15 ECB policy decision. Then we've got jobless claims at 1:30, the US Philly Fed index at 1:30 as well. Then at 1:45, we've got the ECB press conference. So between that kind of midday to 2 p.m. UK time period, there could be some substantial volatility across all markets. So please do be careful and aware of that. Yeah, let's have a look at Aussie Swiss actually, because someone was taking a look. Yeah, big reversal on that as a result of the Swiss National Bank. Let's get rid of these drawings. So we're talking about potentially a short on this one, but as you can see, it's sort of moved down pretty aggressively and then moved back up very aggressively as well. That's quite a decent move for that market in the space of 60 minutes. Yeah, talking about 0.5% move. So yes, hopefully we kept you out of that one, March, and yeah, we'll have another look tomorrow, shall we?
Yeah, may as well. Yeah.
Okay, cool. Right. Thanks very much, Steve. And thanks for everybody for watching. We'll be back in the morning. And until then, be careful of that volatility period around midday to 2 o'clock and trade safe, everybody.
Cheers.
Bye-bye.